Hi, it's Tisha Powell. You're watching US News. Coming up on today's money topic, real estate. Will the house market crash? Or when will it crash? We're about to give you our free. It helps us out a lot. Folks, hit that like and subscribe button for free. Folks, hit that free like and subscribe button. Helps us out a lot. Back right after the intro. So, will the housing market crash in the United States? It depends. It's like saying, how long is a string? It depends where you are and what property you purchase. If it's commercial real estate, then that's a different story. But people think it will crash because of 2008. I've been doing real estate for 30 years now in the United States, and one thing I can tell you, you can actually draft it. You can actually chart it on the candlesticks, because I've been trading for 30 years as well. And what you can tell, the market only crashed 5 times in the last 200 years. And all the time it crashed, it had to do with banking or stock. So let's look at the characteristic of what happened in the past to see what's happening now, see if the market is going to crash. You've got hope. There are some areas, because real estate is location. There are some areas in the United States that will be ripe for the picking. We will tell you right here. You've got to listen. By the end of this segment, you're going to know where in America that is ripe for the properties going down, and it is a nice state. But let's go ahead and analyze this first, folks. Okay, so before you buy real estate, make sure you have a budget. Make sure it's in your income and you have 6 months of reserve, because you never know the market. Even though we can chart it with candlesticks and we know there's low in certain areas, it doesn't mean that you'll be able to afford it unless you have a game plan, which is 6 months of reserves. So with that said, not every part of America is going to be going down. In 2008, it's different from today. What happened in 2008 is that the market had no real buyers. So it was a lot of investors in there, and banks were giving all these kind of loans, 100% financing, 95% financing. It means all you did, you just walked into the bank with a 720 credit score and a driver's license and you get a home. That's not happening today. That doesn't happen today anymore. The banks got tighter. So in 2020, when people panicked and the market kind of tilted down, people bought in 2020, including hedge funds, which must I tell you, that's also one of the reasons the housing market isn't coming down. Most of the buyers in 2020 were hedge fund corporations, and they went in cash. In order for housing to come down, you need a supply. You need to have people that are underwater, which means that your property is worth less than the mortgage amount. People in 2020 have equity. Equity means they can sell it and get cash. So it cannot crash without lack of equity. That happened in 2008. It's not happening now. Like I said, housing bubbles only happen very few and far. It's only happened 5 times in 200 years. So for us to say the housing market is going to come down, we need to be more practical. Some coming down, some not. It is location. You've got to understand as well, we are in an inflation. And because we're in an inflation, housing cannot come down because things are going up. So why would housing come down when everything else is going up? Also, if you chart the graph, if you can do candlesticks, you will see that in 2004, is the exact price that was 2020. Why do you think that a whole bunch of people my age bought in 2020? Because we knew that in 2004 it cost the same. That's part of the reality, young people. First in time, first in line. So the older generation saw the real estate market and we understand prices. The prices you're seeing today are the prices that people paid in 2004. Yes, they did. So I'm telling you, check Florida out. 2004, the prices are the same as it is today. So for saying that we're in a housing bubble, you're not looking at it that it was before. And if you understand candlestick, you understand momentum, support, resistance. Okay? So what happened in 2004? That was the resistance point, and the market couldn't handle it, so it came down. Now there is support, and it went way up. Now they had real buyers in 2020. In 2004, there were no real buyers. It was just a bunch of investors doing 100% financing. Also in 2020, a lot of foreigners did not get to buy real estate. So there were a lot of people in the United States buying real estate that were first-time home buyers because their student loans were not counted against them. So they went in and bought real estate. So there's a lot of people that bought that are like legit and making down payments good. So another issue as well, banks were very tight. They were very strict. They were very conservative in 2020. The banks were not conservative in 2004. So they learned the lesson. So they're not going to repeat it again. So they're not going to give us 100% financing. A lot of people put 10 and 20% down, and they had to show 6 months of reserve. And basically, there is no supply issue. In 2004, there was a supply issue. All the markets that crashed in 1837, people are walking away from their homes. Same for 2004, people are just getting up and walking away from their homes. Nobody's walking away from their home today. They're actually putting their home up for sale. Also, too, they got 2% in 2020. So inflation is at 9%. So common sense is going to tell me they're not going to sell because they can make 7%. But there are areas that have bubbles that will pop because the market is getting softer because of some insurance issues. So there are areas. Got to look into California. California might be on its way down. Pocket areas of California though. Why is California having a problem? Well, number one, they're having an insurance problem. So insurance are not writing. So that's going to cause the market to come down. Number two, they're having a crime problem. 50 Cent just said, 50 Cent is a rapper, he said LA is in trouble. He says that apparently a lot of people are getting bailed in LA and that's going to cause more crime. So California, San Francisco popped, Silicon Valley Bank crashed. So obviously in San Francisco, there's going to be properties coming down. It's not going to be zero, but it's going to be coming down. So you have to think about that, people, if you want to be in California. How long is California going to be down? We don't know. It might take years before it goes back up. So you are taking a risk. But there are location pocket areas in America that will be going down. How do we know that? Because interest rate, government have been pumping interest rates up, and it's only letting a certain amount come down. The ones that did not crash in 2004, as for commercial real estate, that might be a bloodbath. A lot of people took out a lot of exotic loans. They took out 5 years interest only loans, and now they come due. The problem is interest rate is going up and away. Another thing is that people no longer are using as much commercial real estate. They went on to the internet. 2 billion people are on the internet, and now they've created this digital space. So the commercial went down and digital assets went up. So you can see what's getting flat now and what isn't. Commercial went down, digital assets, cryptocurrency, Bitcoin, and YouTube, social media, TikTok, Amazon, people on the internet investing in digital assets. We know that because we see 2 billionaires fighting over digital assets. Elon Musk and Facebook, Zuckerberg, they are fighting over digital assets. They're making internet real estate valuable. So that's what it is. Money does not disappear. It moves, it shifts. That's why people are thinking it's going to come down so they can get in. That's how it is. It doesn't go pop and disappear. So where did the commercial money go? Into the internet. Digital asset, Bitcoin. Why do you think that BlackRock, the biggest Wall Street boys, are coming in for Bitcoin? Digital real estate. That's where the money went. So commercial went down, digital asset went up. So to answer your question, will the home market crash in the United States? It depends. If it's commercial real estate, it will probably crash. If it is real estate that people bought in 2020, you're hoping? No, that is what you paid in 2004. Same price. Look at the Zillow chart, at the charts that are coming up, it's the same price. It dipped in 2004 and it went back to that in 2020. It's called support resistance. Traders know what it is. That's why hedge fund boys jumped right in. They saw the candlesticks in 2020. They matched it up and recognized that it was the same in 2004. They jumped in because they knew at that point that it had beat the resistance and it would be going up. Unfortunately, a lot of people in America now use real estate as an asset class, as part of their portfolio. So that's another reason real estate not coming down. The dollar has crashed. And because the dollar crashed, the hedge fund boys, Wall Street, went and bought up real estate. In fact, corporations own probably 40% of the single family homes in the United States, and they are not selling them because they bought them cash or they put 20% down on it. Check Zillow. Zillow will show you the graph. Subscribe so you can learn more about the candles. Look into California. We'll look at California another time. I'm Keisha Powell. Thanks for watching. We'll see you another time. Take care.